Good morning, everyone. Let us start with the 28th part 1 of our regular SAP FICO session. The topic that we will cover today are defining the tax procedure and assigning the tax procedure to the respective country. Since we are operating in US and India, we must follow the tax laws in India for Indian company code and in US for US company code. Under the tax procedure, we have these four specific items which you need to understand. First is the condition types, second is the tax processing keys, third is the tax codes, and fourth is the tax GL accounts. Let us try to understand one by one for each of these. Condition types. Condition types is assigned in the tax procedure, and against the condition types, when the tax codes are created, the rates are maintained. So about the condition type, you have to understand that the rates in the tax codes are maintained against the condition types, and the condition types are assigned in the tax procedure. Next is the tax processing keys. The GL accounts are assigned against the tax processing keys in the tax procedure. The tax codes. The tax code contain the rate against the condition types in the tax procedure. Tax GL accounts. We know that the taxes are posted to a GL account, and those GL accounts are nothing but the tax GL accounts. So these are the understanding of the four items within the tax procedure, which are condition types, tax processing keys, tax codes, and tax GL accounts. Let me show you on a diagrammatic mode. We have a tax procedure. In this tax procedure, we assign condition types. Against the condition type, we have account keys. Against the account keys, tax GLs are assigned. Against the condition types, tax codes rates are defined. Tax in the GL accounts, postings are made, and then this tax procedure is assigned to the country. We have one more configuration of assigning the tax codes for non-taxable transactions. Not all the transactions that happen in business are taxable. Only few of them are taxable, while the other few may not be taxable. So we have to assign the default tax codes for the non-taxable transactions at one place in the configuration. So we'll be assigning I2. I2 is input GST 0% and O2 is output GST 0%. Let us try to understand the table that I have drawn on the right. We know that on purchases there is input tax, and on sales there is output tax. Input tax, we may get credit or not get credit. Getting credit means purchase tax is adjustable against the sales tax and net is paid to government. And non creditable tax, input tax means we will not be able to adjust the input taxes against the output. We have to make the full output tax payment to the government. Similarly, some of the taxes might be payable under the reverse charge as well. Reverse charge means when the purchase is made, in the purchase invoice the tax is not shown, but it is the liability of the purchaser to calculate the tax and pay the tax to the government. It is not on all the services, it is on the few services which the government has specified. So we know the concept of input tax, output tax, how the input tax is adjusted against the output tax, and not all the input tax can be adjusted against the output tax. The tax which can be adjusted against the output tax is called creditable tax or deductible tax, and which cannot be is called non-deductible or non-creditable tax. I hope this is very much clear. Coming to the practical configuration that we'll be doing in SAP are we will create tax codes for input and output taxes. For our working, we will create 18% tax, 0% tax, and 18% tax under the reverse charge mechanism. These are the three categories of tax that we will be creating, and we will be creating for IGST, for CGST, and SGST as well. Those would be input, output, RCM. RCM means reverse charge mechanism, and non-deductible means non-creditable tax. So accordingly, I have mapped the condition type that we will be creating, the tax keys that we will be creating, the GL accounts that we will be using, and the nature of this GL account. I will explain the naming convention for these condition types, the tax keys, when we practically configure the system regarding the tax procedure. But from the today's session, I hope you are clear the meaning of the tax procedure, the meaning of all the four components that are in the tax procedure, the step of assigning the tax codes for non-taxable transaction, assigning the tax procedure to the country, the link between the tax procedure, condition type, account keys, GL accounts, the meaning of input and output taxes, the meaning of deductible, non-deductible, creditable, non-creditable taxes, the concept of reverse charge mechanism, all those things. With this, I am closing for the day. We'll meet again tomorrow with part 2 of day 28. Thank you.